You got me running, got me running. Shake it, shake it, shake it, feel that. Raise your hands up, raise them up.
Okay, good morning, everybody. Welcome to the Forex Trading Asia Daily Currency Call. So it's the episode 348. It's the 4th of August. Today it's 11 a.m. here in Singapore, GMT +8. All right, so if it's your first time here, big welcome. We do this currency call every Monday to Friday. And the currencies we analyze is as follows. Monday, Aussie and Kiwi. Tuesday, Euro. Wednesday, Pound. Thursday, Yen and Gold. Friday, Canadian Dollar and cryptocurrency. So today is Wednesday, we'll be doing the pound. So this is the currency call where you will get market economic updates, key support resistance levels, trade ideas, and more. This currency call is going to be very beneficial to both the long-term investors and short-term traders. Here we'll be going through what could move prices, possible trade ideas, and also highlighting potential targets and risk. So a disclaimer here, any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speakers. So please remember to do your own analysis prior to entering any trades. All right, so yesterday there was the release of the RBA rate statement, and also tomorrow there will be the BOE monetary policy meeting. So with these key new items that happened already and coming up, let's welcome Kim Hong, currency analyst and LCMS traders, to share more about both of the key news items. Kim Hong.
All right, thank you, Junwei. Okay, so what happened during the RBA's meeting yesterday? Okay, so basically they kept the monetary policy unchanged. Okay, interest rate at 0.1%. QE maintains the same. Okay, now you guys may have realized that the Australian dollar actually strengthened right after the the meeting. Okay, why is that the case? Okay, let me just show you. Okay, so what you're looking at right now is the statement. Okay, the statement released by the central bank. Okay, so there's only one key point here. All right, and it's actually a bit of a, well, not to the market expectation. Okay, this is the point. Okay, so previously, okay, last month, right? Was it last month? Yes, it was last month. Okay, so the central bank actually announced that they are going to extend QE by 2 months. Okay, once the current round of QE ends in early September. Okay, and they will be continuing QE at a reduced rate of 4 billion a week. Okay, then ever since then, okay, COVID cases due to the Delta variant has led to a rise in the number of cases in Australia. Okay, and the market was actually expecting that the central bank, the RBA, will be holding back this whole QE tapering plan. Okay, until further notice. Okay, until the whole COVID situations get contained and things like that. Okay, but that wasn't the case. Okay, the RBA, in a way, I would say, kind of like surprised the market a little. Okay, by saying that they're going to continue to purchase government securities at the rate of $5 billion a week until early September. Okay, and then 4 billion. Okay, there's a reduced rate. Okay, there's a tapered rate of 4 billion a week until at least mid-November, which is the 2-month extension. Okay, QE extension. So this line actually, in a way, I wouldn't say it caught the market unprepared, but the market was actually expecting the central bank to maybe to unwind their whole plan of this for the time being, but they did not. All right, they did not. So that was what actually happened that causes the Australian dollar to strengthen slightly, okay, I would say, against the other currencies. Okay, so they decide to continue with this whole plan, okay, with QE tapering. Does that mean that they actually downplay the recent spike in COVID cases? Okay, not really, actually. Well, I would say to a certain extent, yes. Okay, to a certain extent, yes. The central bank, they actually acknowledge that, the recent outbreaks of the virus are, however, interrupting the recovery, and GDP is expected to decline in September quarter, okay? But now this line over here is going to sound a bit familiar if you guys, just look at it. The experience to date has been that once virus outbreaks are contained, the economy bounces back quickly. Okay, prior to the current virus outbreak, the Australian economy had considerable momentum, and it is still expected to grow strongly again next year. So this line, if you guys actually recall from last week's the US FOMC statement, this line was actually indicated in the statement as well, or similar. Okay, a similar, I would say, a different form. Okay, the point is that central banks are starting to feel that, starting to have this growing confidence that COVID situation, okay, in terms of the spikes caused by, Delta variant or Delta plus variant and so on and so forth, okay, the countries are actually having more and more effective, I would say, effective and efficient ways of handling this whole spike in cases. So with that, they are actually growing confidence. Okay, there's actually a growing confidence in central banks that, you know what, yes, there may be spikes in cases due to these different variants and things like that, but they are unlikely going to pose a threat to the economic recovery in their country. Okay, which is why we know this, like the second central bank that says that it's unlikely that the whole spike in cases is going to have an impact, negative impact on the economic recovery. Okay, which is why the RBA decides to, the RBA continues, okay, with the plan of its tapering starting from next month, September, okay, when the current round of QE ends. Okay, okay, so that kind of like caught the market, a little unprepared, I would say. And that is for QE. All right, for interest rate wise, well, I think they actually, yeah, it's pretty much the same as the previous round of meeting. Okay, the board will not increase the cash rate until inflation is sustainably within the 2 to 3% target range. Okay, the central scenario for the economy is that this condition will not be met before 2024. Okay, so that means the central bank is not expecting a rate hike before 2024. Okay, so that's pretty much the same, I would say, same stuff that has been going on for the past few meetings in terms of interest rates. Okay, now there's no press conference yesterday, right? So I mean, it would be actually good if Governor Low, okay, the governor of RBA, will actually explain, or maybe like at least explain why in a bit more details, okay, as in why the central bank is so confident that the recent spike in cases, COVID cases, will have little impact on the economic recovery. But okay, yes, we do not have a press conference, but Governor Low will be testifying, okay, before the House of Representatives this Friday, okay, at 0700 hours GMT plus 8. So if you guys can catch it, well, I don't actually recommend you guys to watch it because it's probably going to be like a 1 or 2 hours kind of thing, okay. But if Governor Low is going to drop any hints or any more further details on why the central bank is so confident that economic recovery will not be impacted, and hence continuing with the QE tapering, I will update you guys again on Friday, okay, once the testifying is over. All right, so just pay attention that there's a testimony on Friday. All right. Oh, and another point to take note is that the RBA will be releasing quarterly monetary policy statement on Friday at 9:30 GMT plus 8 as well. Okay, so basically, just I will update you guys again, okay, on Friday. Okay, so the key things will be to look out for will be the economic projections. Okay, with the whole COVID cases and things like that. Will they actually make an amendment to the make any revisions to their economic projections? Okay, in terms of inflation, employment, or GDP and things like that. All right. That as well, I will update you guys on Friday. Okay. With that, let me move on to the next central bank meeting. Okay, the Bank of England monetary policy meeting that will be held tomorrow at 1900 GMT plus 8. This meeting, I would say, personally, I feel like, I feel that it's not going to be that eventful. Okay, let me just do a quick recap of what went down during the previous meeting. Okay, previously, as expected, no change in monetary policy, and the committee actually say that they will actually have an opportunity to assess the economic outlook, okay, the UK's economic outlook more fully in the context of its August monetary policy report, okay, and accompanying economic projections, okay, because this time round, tomorrow, they will actually be releasing their quarterly monetary report as well, all right, which actually contains economic projections. So what they are trying to say, what they said during the previous meeting is that, they will be able to, I would say, be more informed, okay, make better, make informed decisions on, on their evaluation of the economic outlook of UK, okay, this time around, all right. So for tomorrow's meeting, highly unlikely that there's going to be any change in the monetary policy, okay. Personally, I don't think that they're going to drop any hints on QE tapering, okay, because there's been too much uncertainties, okay, going on, well, globally and as well as in the UK, right? First thing, COVID cases, okay, COVID cases, as you guys already know, that, the Delta variant has caused a spike, okay, in the UK, okay, and for what it's worth, it actually started declining. The number of cases actually started declining, okay, only after mid-July. So we are still not very sure about, what's going to happen in August right now. So, there's a spike in cases, and then there's a temporary decline in cases and things like that. So it's the whole COVID uncertainty is still ongoing. Okay, that's the first uncertainty. Okay, second uncertainty, there's a slight slowdown in business activities. Okay, so in July, okay, business activities referring to the manufacturing sector and the services sector. Okay, there's a slight slowdown, okay, in business activities in those two sectors, okay, as reported by the PMI data, okay, from IHS market, okay. Yes, they are still expanding, okay, they are still expanding, which is good, but there's a slowdown. But we are not sure if this slowdown is going to be sustainable, or or it's just going to be temporary. If it's just going to be temporary, then we may be seeing a faster pace of expansion again in August. However, if the slowdown is going to be sustainable, then it may actually, the PMI value may actually go down lower. All right. So that's the second uncertainty. All right. Now the third uncertainty has to do with the ending of the furlough scheme. So the furlough scheme is basically the UK's wage subsidy program. All right. So this whole wage subsidy program will be ending in end of September. Okay, and with this whole ending of wage subsidy program, there may actually be an increase in unemployment. Okay, back to unemployment again. Okay, an increase in unemployment rate. So that's the third uncertainty. Okay, that that the central bank is actually concerned about. When it comes to making decisions on whether they should be actually carrying out QE tapering or not. All right. So yes, with all this uncertainty going on, unlikely that the BOE is going to drop hints on QE tapering. But like I mentioned earlier, they're going to be releasing, okay, the quarterly monetary policy report, which contains the projection materials. Now, in the report, they may actually be revising their inflation upwards. Why is that the case? Okay, because for the past 2 months, there has actually been a strong rise in inflation, in UK's inflation. Okay, in fact, the annual inflation has actually surpassed the central bank's target of 2%. All right, so that may actually the recent releases of inflation data may actually cause the policymakers, okay, to do an upward revision in inflation projection. Okay, of course, there are other economic indicators to look out for, like GDP and unemployment, and things like that. All right. So with that, yeah, I think it's going to be quite a, I would say, non-eventful BOE monetary policy meeting tomorrow. Okay, if they were to make it eventful somehow, okay, in terms of QE tapering or anything, I'll just update you guys again on Friday. All right. Yeah, that's all I have for you guys today. I'll hand it back to Junwei.
Okay, thanks for that, Kim Hong. Yeah, so just a quick roundup. So for RBA, it happened, and then the Aussie had strengthened, mainly because we were expecting a QE tapering, but it's still happening. The QE tapering to be on hold, but it's still happening. Am I right, Kim Hong? Yeah, okay. And then to take note, on Friday, there's a government low speaks event. And then for BOE, to watch out for the quarterly projections and to take note of the three uncertainties that Kim Hong talked about: COVID, uncertainty, the slight slowdown in business activities, and the ending of the furlough scheme. Right, Kim Hong? All right, awesome. Okay, so now I'm going to move on to the next segment, which is head into the charts with the dollar index with Scott Andrews here from Forex Briefcase Australia. Scott.
All right. Hi, everyone, and welcome. Happy Wednesday as well. So the US dollar was what looked like a potential breakout over 92, low 0406, didn't quite eventuate. So we did see it. I'll just slightly tweak charts here. So what we did see was that, price got to around 92.12 or so, or even a little bit higher, 92.13. And this was earlier in the US session at around 9 o'clock or so. We saw, the Aussie dollar, for example, pushing a little bit lower. There was a nice trade there. And it was a good example of utilizing the ECOFIN group with the Traders Club. Someone asked a question about the Aussie dollar. Jin was quick to reply. And then we linked it to the currency call on Monday, where we talked about that resistance level at 74.02. And then you can utilize the index just to say, okay, like it is moving a little bit higher now, and we're seeing, a potential selling opportunity weighted a little bit. So that was a nice trade there. Although to really, see some more downside on these other currencies against the US dollar, we're just not seeing enough of a catalyst to push it past, 92.15 or so. Now, what I do want to do is just quickly go over the US news that we saw yesterday as well. And also, Kim Hong, I got a question from one of the new members about the site that you were using for the RBA statement. Now, I did refer her to a link, but I just wanted to make sure. I think it's probably in the trading chat though, in ECOFIN, but if you maybe just want to share the link in the ECOFIN group, just so people can see. It's not a paid for website as well, the stuff that we use. So it's all available. Now what I'll do, guys, I'll just share the news now and just a couple of quick talking points. So we saw factory orders, they did beat at 1.5%, expected was 1%. That came out last night. That sort of saw the US dollar hold over 92, but it just, wasn't enough. We had a couple of FOMC members speaking. Now, later today for the US, we had the ADP non-farm employment change, 695K expected, but we've got it in a tight range. So if we get it around 695 to 690, that's probably going to help hold the US dollar up. We also have at 10 o'clock tonight, ISM non-manufacturing PMIs. Now, one more quick talking point. We've got so I just wanted to show in a graphical sense the US factory orders. So we're still, over what we saw in April, which was a recent low. We're pretty close to where we were a few months ago as well, back in March. So let's see where the next release is on factory orders. It's a good indicator to see what is going on in the US and what demand is like. But in conclusion, really, for the US dollar, we'll just wait for tonight. And then obviously we've got the non-farm payrolls on Friday night. So I'm just going to sort of stay and just see what happens tonight. And then, no big trading opportunities on the US dollar itself for today either, guys.
All right, thanks for that, Scott. So in case you guys are wondering what is Scott talking about, this ECOFIN platform, just check out tradersclub.lcms.com.sg. It's basically a private platform that more information is shared there, more trade analysis, more signals analysis. I'm going to get Daniel to talk about that in a little while, but before that, I'm going to get Daniel to talk about the currency in focus today, which is the pound. Daniel here is a trading coach at LCMS Traders. Daniel.
Okay, thanks, Jinwei. Wow. So Kim Hong and Scott already done all the fundamental analysis already, right? So it makes my job a little easy. Okay, so let's go ahead to the charts then. No need to go to the calendar anymore. Now, what we'll be looking at for pound USD, I mean, just a quick recap again, just in case those who missed it, is that, you know, when we look at the pound this Thursday, where they call it a super Thursday, you know, where it's all the central bank event in the UK, Bank of England announcing policy. As Kim Hong has mentioned, straight away, we don't expect anything to change, right? It seems that all the central banks this month, right? This month's central bank's theme is let's wait and see. Let's keep it as it is. We have Aussie, RBA doing the same thing. Fed is also doing, the US Fed is also doing exactly the same thing as well. So we won't be surprised, not surprised at all, that everybody's expecting Bank of England will be doing the same. Keep the rates stable, no change, no change from last month. So asset purchase also will not change. So you will not expect any early end of the QE or any tapering, so on and so forth. Okay, but however, we want to take note that they are voting. The very interesting thing about Bank of England is that they actually release the votes. You know, how many people vote for interest rate change? How many people vote for end of the QE or early end of QE? Now if you see in the calendar, don't be surprised about it. You will see that usually is one person. I think it's Michael Sanders, if I'm not wrong. He's usually a very hawkish kind of person in Bank of England committee. He will be voting for a positive to end the QE early. Now, what we'll be looking at is like what Kim was mentioned. No surprises there, even though UK has been improving. The spread of Delta variant has been improving. Vaccination is doing very well. We do see improvements in the opening of the economy, but nonetheless, I think last month we had some data showing a little bit softening, expansionary still, but a little bit softening. So now what we'll be looking for is what will be happening, right? So one thing is, don't expectation of any end of QE or increased interest rate. That is probably not. But what will be interesting is you're going to see the votes. Okay, the votes is the one that for Bank of England, you'll be taking a look at it. If there are more out of the 9 seats, okay, if not, and then 9 seats, one right now, we know that is usually a very hawkish person, that's Sanders. If you got 1 or 2 more coming in, look at the votes, right? If 1 or more 2 coming in, then that means that you got more and more people having more hawkish statements coming in. Then the possibility of the UK, the pound would strengthen. Okay, but if that doesn't have the case, then yes, I think it's going to be a non-event. I agree with Kim Hong, there's going to be a non-event situation there. But of course, the other one to take note, maybe you want to right now, is that if they think that with the increase in inflation coming in, if I'm not wrong, it's going to above 2% already, and we expect them to say it's transitionary. But if they don't say that, they'll say that it's going up and it could be sustained. They will want to do a little tweaking. Then we have to be worried that because that will cause the likely future-wise for tightening comes in. Then it will cause some inflation goes up. They may want to consider to end the QE or tweak the QE a little. Okay, so it's just a few long shot scenario planning that you probably need to consider. Else, if everything stays status quo, I think it really is going to be a non-event thing similar. So what will probably be happening will be like this, right? If it's a non-event, everything stays status quo itself, most likely it will stay along my resistance level. Okay, right now you can see it's really very nice. It's holding at 1.40. Okay, it's really being resisted really very strongly at 1.40. I think right now it could be people are taking a positions coming in. It's probably going to slightly move upwards for till Thursday. Let me move it to here. Not so far, right? Well, it's slowly move up to slightly up close to the resistance, and then they'll wait and see on Thursday evenings what's going to happen. Now, if they're going to, as I mentioned, the scenarios where a slightly hawkish statements comes in, you will probably see really very nice for pound is that if it breaks above 1.4 level, maybe above here, it probably move upwards, right? So probably something like this. Maybe let me show it to you. I put my support and resistance. I shift it in easier for you to see. Now, if it breaks above the 1.4 also like 1.400. Okay, 1.400, breaking above that, you probably look at it as push all the way to the intermediate support resistance level of 80 pips. I will probably be looking for a stop loss like almost 40 pips. So 1:2 risk reward ratio coming in. But however, again, the other scenario, nothing changed and no surprises, anything. Then you will probably be looking at probably moving across. Okay, moving across until which day? Friday. Because Friday we have NFP coming in on a Friday, expecting a little good news coming in. If it's really a good news, then US dollar could strengthen and pushing it down on the Friday coming in. But with that, we'll talk a little bit more on NFP probably on Friday coming in. Okay. And for those who are members here, we have live trading sessions today. So do join in. We'll be talking about how to prepare for NFP as well. Okay, so right there, give me a scenario. If there's nothing happen, it's going to move across, then you probably will not be interested to take any trades in there. I'll be looking at a possible surprise, and then if we go past 1.4 again, I'll be looking for probably 80 pips take profit for a 40 pips stop loss. This will be a plan for pound USD. Now looking at the euro pound. Now before I look at euro pound, I'll look at euro USD. We did talk about it yesterday. Okay, so if you look at this, we were looking at a possibility of moving, pushing it down. Right now, it's still hovering around the resistance level, still not moving since yesterday. Okay, so if it does, we have a bias of pushing it, moving down, and pound USD, if it's a surprise going up, then I won't be surprised that it will be moving across, right, until Super Thursday. We have any surprises, then you see probably it moving down. But moving down, right now, I did talk about it on Monday group coaching sessions for the club members here. We did talk about it, and it pushed for below 0.8530, and it goes push down like 30 pips of take profit for 20 pips stop loss. However, right now at this stage, I wouldn't suggest anybody to use euro pound. I think if there's any even surprise, because we have a intermediate resistance here at a support level at 0.85, quite a key level here. So you have a very tight range. So if anyone want to change, I'll rather go for a look at the euro USD or euro USD or the pound USD. So I would say for now, maybe these 2 days, stay out of the euro pound, because the strength is not certain right now which currency pair is to be stronger. Okay, then last of all, we're going to talk about yen tomorrow. So about pound yen, I just talked about it. Right now, it is being bounced off at 1.51 support level. There is a possibility on Monday. We also did talk about that. Let me put it here. Monday, we talked about it goes down. It did that already on Monday to group coaching sessions coming in. It did goes down to bounce off the support zone coming in, and now seems to be part 2 coming up, moving upwards towards the 152.95 level. However, watch out. Recently, the safe haven currencies, with uncertainty happening around, the safe haven currencies seems to be making a comeback. Okay, so for pound yen or the yen pairs, be careful. Like last night, yen was just quickly strengthened. There was quick strengthening where people were going to safe haven currencies with the uncertainty coming in. So please trade safe and be well. Okay, so we leave you with the pound USD trade idea for Super Thursday.
Okay, thank you so much, Daniel. All right, so just a quick disclaimer again, any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speakers. So please remember to do your own analysis prior to entering any trades. Okay, so guys, don't leave just yet. I see a lot of you coming in from the Traders Club. So a big welcome. Thank you for joining us every morning. I believe you guys have been benefiting from a lot of the analysis that we've been doing, about 350 already. But if you join us from the Telegram channel, you know you have been enjoying our trade signals absolutely free. And a question you might have is that, yeah, we have told you when to get into a trade, but you do not know where we exit. And sometimes you may feel that, hey, how come the signals is, when the signals are fired out, the move has already taken place. So there's a bit of a difference when it comes to the signals in the free Telegram channel and in the Traders Club. And I'm going to let Daniel explain more about that. Daniel.
Okay, thanks, Jinwei. Nice to be talking again. So, yeah, indeed, those who come in the Telegram channel, just want to say that, sometimes you, in the Telegram channel, you say that you receive signals a bit late. That's true, because in what we do in the LCMS Traders Club, the platform, let me share my screen with you here. The kind of Traders Club platform, we actually issue the signals 5 minutes earlier than the Telegram channel, just for the club members alone. Okay, so right here, just want a quick one, say we issue the 5 minutes earlier than the Telegram channel. Same thing, we issue the sell trade, what currency pairs, what price, and what stop loss, and 3 possible take profits targets. But not only that, we also issue the signal analysis on why we take the trade, and why we take the trade, so that you not only earn from the signals, you also will learn on how we trade using with the signals, why we issue the signals, and so you can trade better. Now, yesterday was great. Look at this. Well, yesterday we issued 5 signals all together. And if you look at it, we also give you, when you hit TP1, TP2, or TP3, we will issue out to ask you whether to secure your profits, which close the trade, to secure profits, or to continue on. And yesterday, you could see lots of trade like pound, Aussie, 20 pips, TP1. We decided, yesterday market wasn't really very strong. With a hit TP1, time to close the trade. Can see that's what happened here. You can see Aussie USD, we issued the trade idea. New Zealand USD, really very nice close. We closed the at 60 pips. That was yesterday. A trade, and many Europe yen as well at 40 pips. So it's really very nice. Yesterday was perfect. We secure, I think, more than 200 over pips just close by hitting the take profit targets itself. So really very nice. I encourage you to join. You can see we are, based on the analysis, really coming in. Now you will think that, hey, with the Telegram channel you got alert, right? Now here, not only that, in the this platform here, we have, of course, many more trading floors, market watch, and many more. I'll talk about it more in the next few days. But right here, this platform is available on the web, desktop, and the mobile applications, which means you can access this platform almost anywhere, anytime. And for the signals or any new trade ideas coming in, you will receive mobile notification of these signals and our trade ideas coming in, so that you will know when to take the trade. Right, so you must thinking how to join it. Jinwei, I saw he already shared the idea of the club membership there. Just right, I want to show it to you. tradersclub.lcms.com. Actually, this is where you need to do. Continue to go down, scroll down all the way. We can see many more. Of course, you can see we have lots of other features coming in here. Click in this one, right? This platform is worth thousands, so much things, benefits, trade ideas, market watch, analyzing the market for you, signals coming in, really very beneficial to your trading. So all you need to do is just fill it up and pay only for $49 a month. Okay, this is really, without the doubt, least you must do if you want to make sure you achieve your best in your trading. So just click submit, and I'll see you in the Traders Club.
All right, thank you for that, Daniel. Yeah, so yeah, I pasted the link to the Traders Club in the chat. So just go ahead and read out more on it. And yeah, we have come to the end of the session. Today, we'll see you guys tomorrow, Thursday, for the Yen and Gold session. Thank you so much, and goodbye.